do come back in 2026 in a big fashion. But let's go stock specific now. Manish Tandon, CEO and MD at Zensar Technologies Limited, joining us this morning to give us a sense as to how growth is playing out industry-wide as well as for Zensar in particular. Manish, hi, very good morning. Talk to us about what's playing out on growth. How have various verticals done? Give us first the top-down view so that we get a sense.
The story of this quarter really is that despite a seasonally weak quarter, we have delivered for investors 18% year-over-year growth in profits in dollar terms and 24% year-over-year growth in INR terms in profits. What we are trying to do is, if anyway we know that the seasonality factor of Q3 is going to be there, we did 2 or 3 things. We showed up our margins by doing more work offshore. Second is, while you might look at the top line, there is a significant volume growth that has happened, 1.7% or so, if I'm not mistaken. And this move has happened from on-site minus 3.1% to offshore, I think 2.7% or something, and overall net was 1.7%. So when you do this, your top line decreases slightly, but you see significant improvement in your margins, and that is what we have delivered to our shareholders this quarter. Our EBITDA is up 200 beeps. Our gross margin is up 270, I think, 270 basis points. And despite taking a hit because of the new labor laws of $2.5 million, our profitability, profit after tax is up 13.2 by, I think, 1.5% or something like that. So from an execution and operation perspective, we are very happy with what we have done in this seasonally weak quarter. Optics wise, it may look, okay, top line degrew 1.3% or whatever. But again, I'm a bit old school, so I look more at profit growth than at revenue growth, because revenue growth without profit growth is just having fat calories, empty calories.
Right. And what is it that you hope to clock in terms of the full year growth for FY27, and how your various verticals, that's, bfsI, TMT, healthcare, etc., are going to pan out?
Well, we don't give guidance, but all I can say is, your audience is very smart. And if there is volume growth of 1.7% in Q3, ultimately it will translate to revenue growth also, correct? So
Yes.
From an outlook perspective, I don't think that the situation has changed very materially for either us or for the industry. In fact, the competitive intensity on the core business, what people call or what I call the traditional lift and shift outsourcing type of business, the competitive intensity there has gone up significantly. Everything that is coming for rebid is coming at a significant discount. And, large companies are fighting over scraps, literally, if I may say so. So that remains under pressure. And the newer businesses, especially AI-led deals, they are not, $100 million deals. They are, 2 million, 5 million, 3 million, because clients are also getting used to and experimenting with the technology, and technology itself
Right.
is evolving so rapidly. So I wouldn't say that materially the shape and the of the industry has changed from what we were seeing in the last 1 year.
Okay, and Manish, when does discretionary improve? Because that really gives us a pulse on how IT will likely recover and how your growth will recover. Give us the trajectory on that.
See, discretionary spend, again, I have a slightly different theory. And one, uh, it is happening. It is not that it is not happening. But the discretionary stuff really take booms when the discretionary stuff on revenue generating activities for clients, right? So when the internet came, initially the pickup was a bit slow. And then people realized that, hey, this is a new channel, this is a new revenue generation model for us, right? We have not reached that stage in AI. And if and when we reach that stage, then the real discretionary spend will be happening. Today, AI in most organizations is being used more as influencing the cost side of the P&L rather than the revenue side of the P&L. And I think that is where the challenge is. So I'm not saying that the discretionary stuff is not picking up, but it is not booming. And if you look at capital expenditures of clients, um, there are a set of clients who are just buying AI stuff and rolling it out, or they are investing in keeping the lights on and running their business. And unfortunately, when they buy, AI licenses or whatever, Chat GPT or Gemini or Copilot or whatever, that doesn't do much
Yes.
for services firms.
All right. Thank you so much, Manish. We'll let you go on that note. Of course, outside